But let's connect now with the management of Bandhan Bank. Ratan Kumar Kesh, who is the MD and CEO of Bandhan Bank, joins us to discuss their Q1 performance. Ratan, thanks a lot for joining in. Just wanted to understand a little more. I mean, I was going through your numbers. Your asset quality issues continue. So this time around as well, the slippages, although they are down, your gross NPAs at even just the ratio itself is at 4.2% versus 3.84. So there is some amount of deterioration in asset quality. Can you give us some guidance on what the gross NPAs and the credit costs could look like for the rest of the year?
Thanks, Sonia. Look, 4.2% what you see as gross NPA is largely because of the fact that the advances have sort of steadied this quarter. And generally for us, quarter one is a muted quarter. In fact, over the last years, you would have seen the quarter one, we have shown degrowth sequentially from quarter four to quarter one. This year, we've been able to hold it there. That's one factor. But our slippages are down by almost over the last 3-4 years. This is the best over slippages, I would say. It's down to 2.9 from a 3.5%, and then 1 year back it was 7%. As quarter two, middle of quarter two, our advances pick up, and then quarter 3 and 4 will be significantly better quarter, and that trend will continue. Given that, we are not worried about the percentage-wise slippages as a subject. But clearly, the overall DPD pool in the EEB portfolio, which is one of the larger one for us, has come down. So I think going forward, we get to see significant improvement in the portfolio quality.
So can you give me some number? What are you looking at? Gross NPAs, where will it be by the end of the year?
I think we will be closer to 3.5 or maybe slightly better than that as well.
Okay.
3.5 by the end of the year. Mr. Ratan, good morning. Prashant here.
Good morning.
So, I mean, it's a broad question, but I think you'd understand this. I mean, markets are also waiting. Is the worst kind of starting to look like it's coming? It's behind. How would you address that question? I mean, it looks like a much better quarter in what is otherwise a seasonally weak quarter for you. You're also sort of moving towards more secured assets. So that should also help over a period of time. So just help us understand.
Over the last 5 quarters, maybe a couple of years, and definitely over the last 5 quarters since April 2023, we've been putting a whole bunch of guardrails to improve our portfolio quality. Growth has not been a problem, but I think portfolio quality was significant focus, and we were decisively wanting to come out of the pandemic, post-pandemic challenges. I think I would say, looking at the current set of numbers, this quarter performance, I would say, advances, we've been able to hold it, the growth. Subsequently, we will see better quarter in terms of advances, number one. Slippages have come down, and it is coming down consistently over the last 5 quarters. The DPD pool has dried down from a 2,800 range on the EB to roughly around 1,200 and slightly inched up to 1,400 crores. So I would say we are largely out of the pandemic. Maybe small residual 5% problem could still be there, which will come over the few quarters, but I think we will be able to overcome that clearly. So that's where it stands today. In terms of our ability to garner deposits, you have seen our deposit growth has been higher than the loan growth. So we will continue to garner better deposit-led, liability-led asset growth. So our NIM, we will continue to hold it reasonably well. So I think we are quite optimistic over the next few quarters.
Okay, all right. Hi, sir. Good morning and good to see you in. And good to hear that you're sounding optimistic about the second half of the year in particular. So for the year, to get a couple of numbers out, loan growth of 20% with margins holding in this vicinity, NIMs at around, the 7.5% odd.
So loan growth, as we said, that would be in the range of 16 to 18%. That will be able to hold it. NIM, depending on how the interest rate looks like, I think we should be able to hold it at 7 to 7.5. This quarter has been great for us. We are continuing with sequentially 7.6% NIM, but I think it will remain in the range of 7 to 7.5.
Okay, all right. You have that credit guarantee fund for micro units money. Could you quantify what is the amount you're expecting and by when?
See, you are aware of the fact that we had got the first tranche settled, second tranche was not settled at that point, and then they wanted to conduct an audit. The audit process is advanced extremely well, I think nearing a closure. Unless the audit is fully completed and discussion deliberations are held internally in their board, etc., I don't think we'll be able to put any specific number, but we are fairly confident of a positive closure soon.
Okay. Just, before we let you go, can you give us some qualitative details on the MFI sector itself? I mean, we have noticed some pain in the MFI sector over the last 2 to 3 quarters. Do you think it could take some time before things recover there? And what are you looking at?
See, first quarter has been a bit of a heat wave, general election. So some of those may have impacted slightly. In some pockets, there has been flood issues. But yes, in some specific geographies like Maharashtra, Punjab, we are seeing stress building up, although our book size is fairly small in those geographies. Overall, I think all the companies in the MFI industry are actually putting some bit of additional guardrails to ensure that the portfolio quality does not deteriorate. We as a bank, we've been doing all of that for the last 5 quarters, and some of those are holding up extremely well for us. As I said, that we see slightly early signal in this quarter with DPD pool inching slightly upwards, but that's essentially in SMA 0 pool. But overall, we are not worried about the industry trend as of now. But yes, we are watchful and careful to make sure that we improve our collection efficiency from here
on. Got that. So on return on equity, could you guide us? What would you like this to be at? Came in at about 19% in the first quarter. Would you be able to maintain this around these levels from here on, because of the improvement that you're guiding for?
So I think depending on how the overall market, the NIM, all of that holds up over the next few quarters, I think we are fairly confident of staying in the range of 16 to 18%. And maybe on the positive side, as we progress, depending on how our growth and some of the slippages, we are able to hold it at that levels.
Okay, all right. We'll leave it there, Mr. Kumar Kesh. Appreciate you joining us here on CNBC TV18. Thank you very much. I mean, it's a name where there is interest. There has always been interest. Valuations are, I mean, you can say cheap. Of course, there have been issues at Bandhan Bank over the last many quarters. So we'll see if the market is willing to bet on the fact that maybe, they're coming out of the issues, Bandhan specific issues that they've been facing.